Good morning, traders. This is Victor with Steady Income Trading. Today is Saturday, and we're going to do another weekly update and review. Take a look at the last week and see what's going on. To start, let's take a look at our performance over the last week. And if you can take a look here at NetLeak, we are at 48,153. Market is 431.52, which gives us puts us just under 1% down for the week, and market is up about 0.5% overall. There's been some moves down last couple of days, but overall the market was pretty positive for the most of the week. For the year to date, we are actually meeting our market again. As you can see right here, we meet again, so we'll see what next week brings. I'm pretty sure we'll take over at some point soon. Market going down last couple of days. It's obviously it's hurting our trades at the moment because they're all positive delta trades, and but nothing is really challenged, and I'll show you that in the platform. Everything is fine. We're just having some paper losses while this is unfolding. And actually, let's take a look at the platform right here. So most of, or basically all of our positions are in these two expirations here, H4 and Z3. This is the newer one, and our last 6 naked puts are in this expiration, but the PDSs that are attached to them are actually here in the previous expiration right here. So they should be looked together. Like, for example, PDS 14 goes along with the naked puts 14. Unfortunately, I can't group them together in Tasty yet. Apparently, they're working on that. So next year, there might be some changes. But for right now, this is what it is. However, the older trades are all in the same expiration, and they can actually be shown here as such. So the oldest one you can see right here, the oldest one would be this one. It's been going on for 53 days, 50 days, 51 days, and those are in decent shape, still showing profit. Not as much as a couple of days ago. This one was slightly over 80%, but this is fine. We still have some time to go, so let's leave that one. This one here is still 50% up, 45. So all of the older ones are decently positive. Now we have some newer ones. For example, if we go here, these are showing 68% negative, 2% negative. These are flat. Obviously, I'm showing naked puts because that's what we are concerned with. The naked puts are what determines where we are with the trade. And if those naked puts should reach around 30 delta, we then would look to manage them and do something. But as you can see, nothing is really getting close. You see, we start with around 9 delta, and this one is the most challenged one on this expiration is this one at 15. But we can take a look at the newer ones here. Those are a little bit worse off at the moment. These, well, not really. This one is 44%. So yeah, the worst one is actually the one here that I showed earlier, and that one is, where is it? Minus 68%. And as you can see here, even though that one is showing $136 down since the opening, profit and loss since open, the PDS is bringing in around $40 to help a little bit. So the actual loss on the trades is 94. But again, 15 delta, this is nowhere near anything that we should be doing anything with this. It's just showing a little bit loss at the moment, and that's it. And pretty much the same goes for these. These are 12 to 12 and a half, 12. So nothing really for us to manage. However, if next week continues to go down, then we shall look into doing something. And if, for example, if this one here would become around 30 delta, then we would probably just roll this one out in time and down in price for break even, maybe a dollar credit just to cover the extra expenses for the commissions, and that would lower the deltas. And this would also allow for the put debit spread that's attached here to go from showing $40 profit to show more profit if the market continues to go down. So if the market continues to go down, we would then allow this put debit spread to mature, to gain more value. And then if we are forced to close the nakeds, we would then cut the losses by closing the PDS, which would show positive at the time. However, if the market just slows down, moves around, goes sideways, or turns back up, this PDS would lose value, but also the naked puts would start catching up with time decay, because at some point this will be worthless unless price reaches the strike. The option will expire worthless. Obviously, we'll be closing it before it expires. But anyhow, that's the plan with that. So just you have an idea. This is perfectly normal. We are actually yesterday we were down with the net leak around 2% or something, and that was mostly due to increase in vol, not the decrease in market, because the market actually only moved down, at the end of the day, half a percent roughly. But the VIX increased from 16 something to 19 something. So there was a decent move in VIX. Basically, the people start buying protection, start buying the puts, and they increase in value, thereby hurting our short positions temporarily. So we're like a little bit like a bow and arrow. The market is now going down. We are stretching, but as soon as it slows down, that VIX goes down and the market moves a little bit up, then we will release all that back, and we will probably have some couple of huge increase in net leak over a couple of days when that happens. We just have to make sure that we are able to do that. So that's why we don't want to overextend ourselves, because if we had too many trades on at the moment, we would be forced to do something. We would have to start maybe closing some of those trades with the loss, but we are nowhere near that because we are keeping an eye on our Greeks. So the last line here that was taken yesterday, but not at the end of the day, because after I've taken this, the market still went down a little bit, and net leak went down as well. But at the time when I took this, we had 0.21% in deltas, which is already a little bit higher than we want to be, and therefore I didn't open another trade, even though our other metrics were in line. So buying power is fine. We had more room. We had the data is fine. Everything is fine. We could have opened another trade were it not for delta being too high. So this is how we keep ourselves safe, well, to a degree, as much as we can. So we want to be efficient. We want to open as many trades as reasonably possible without overextending ourselves. So now we're in a position that we can take some of this market downturn without being forced to close the trades. Should the deltas go much higher next week, then we would look into opening another one of those hedges on demand to lower the deltas. We can quickly bring in 30, 40, 50 negative deltas by opening them. But at this point, I didn't do that because there was no need. Our metrics are fine. Everything is in line. So I didn't have to do that. So let's see what next week will bring, and we'll go from there. I think let me just quickly see if I'm missing anything. If I want to, so about the bill position. This is the T-bill ETF. I lowered the exposure slightly just to avoid paying interest, and you see I have pending margin interest, and this is because the cash is used up by the bill ETF. So I'm lowering down the exposure until I hit the spot when there is no more any margin interest charges. But we'll see. We'll get there. We had 80% net leak. Maybe next month we'll go to 70 and see what happens. And then we have a couple of negative delta trades. Those are in SPY, and those are put debit spreads that are actually that gain few bucks yesterday, but they're not really gaining. That they're still showing a loss. But yesterday they got $59 in gains. And then if the market continues to go down, then we would probably try to cash in at least some on this trade. That's 7 days. It has 7 days to go. So the short strike, the long strike is at 424. The market is at 431. So it would have to go down another 10 points. So we'll see. It may or may not happen, but if it happens, we'll try and cash that there, right? Okay, so that's on that. Yeah, that's all. And if you find this helpful, please like and subscribe, and I'll see you next week. Thank you.